Welcome to the SNN Network Canada virtual event. I'd like to introduce our next presenter, David Kratico, President and CEO of BQE Water. Sir, the floor is yours.
Great, thank you, and good afternoon, everybody, and welcome to our presentation for BQE Water about recurring revenues from water. Guess you need to be cautioned if I'm making any forward-looking statements. Hope everybody sees my advancing slides. I apologize for the technical difficulties and delay. Diving straight in, BQE Water, who are we and what is it that we do? We're specialists in management and treatment of water in the mining, metallurgical processing, and metal smelting industries. And our mission is to reduce the life cycle costs and risks of water for our clients and to help them meet their ESG goals. And we do that through technological innovation, where we have patented technologies that are addressing really urgent needs in the sector today. Customer-centric business model, where we act as the single point of accountability for water for our clients from the very early stages of projects in the early sort of permitting development stages all the way through closure. And our holistic approach to water in general, where we look at the entire life cycle of projects and take into account risks. Why should you invest in BQE Water? Well, there are many reasons. We listed a few here. We have very valuable intellectual property in the sector where we operate. A very strong pipeline of projects in a large and growing addressable market. Some of our clients are top metal producers in the world, so we're established business, and we're making money and have no debt. Now, I realize that many of you listening to this presentation are not probably familiar with the whole situation with water in mining, and so I'm going to spend a few minutes discussing the market, specifically water in mining, and our business strategy and approach to that market. So probably many people don't realize that over 90% of metals that are produced and consumed in the global economy are produced in water. So all the mineral processing, metal extraction typically happens in water media, or not all of it, but the vast majority of it. So water really intersects the production needs to begin with for the sector. But in the process of contacting minerals and metals with water, water becomes contaminated, and then that water cannot be discharged into the environment without treatment. In fact, tailings failures are an example of situations where storage of contaminated water, excess storage, result in disasters, and many regulators now don't allow storage of contaminated water as an environmental liability. So it's the environmental regulations put in by governments that are driving a lot of our sector. But there's also an increasingly important component of water in mining, which has to do with social acceptability of mining projects. So over and above ticking the boxes of, meeting legal requirements, over and above that is demonstrating social acceptability of mining projects, and water is a huge component of that. Now, when I think about the mining sector, I think about basically three segments of that sector, and everybody probably thinks of mining in terms of the existing operating mines today. Well, that sector here in blue is critical, obviously, for delivery of metals to market. We have many mines in operations in North America and around the world. What's important to realize is that these mining projects are long-term. So the average life of an operating mine today for base metal is about 20 years, and for precious metals is about 10 years. So, when we get into a mining project, it's not that we have a one-time sale, but we follow that project, and our commercial business strategy really is focused on extracting value from these projects throughout the life cycle. And the operating life of these projects is 10 to 20 years. Now, eventually mines come to an end of their life, and they go into closure. The issue, of course, is that at that transition point, it's often impossible to cut off the contact between sources of contamination and water. And so the generation of contaminated water continues well beyond the operating life of mine and into closure for many years. So, successful projects in terms of successful closure would look at additional water treatment and production of clean water requirements for another 5 years. But many projects actually end up with water treatment in perpetuity, legacy sites. Everybody can probably think of some of these environmental legacies around the world where creation or generation of contaminated water continues to date. Now, interestingly, there is a lot more mines in closure than mines in operation, and typically the ratio for us is about 10 times as many. Now, likewise, before mines get into production, they have to go through phases of development, permitting, mine development, etc. And although in that phase, there is no real production of contamination yet happening, mining companies need services of someone like BQE Water to address their needs. And because not every project makes it from development to operation, there is another multiplier, about 4 to 1, of projects in development to operating projects. And when you look at basically the size of the North American market being about 25% of the global market, and the number of mines that are in Canada and the US, you arrive at the global total size of the market or projects on the order of tens of thousands. That's really important to understand. Now, how do we extract value from that market? We do that in the form of services. The services come in different shapes and forms and typically fall into one of these 3 buckets. The technical innovation part is really the beating heart of our organization. That's what we're known for, and that's what we're introducing into the sector is technological innovation. But that really lies at the intersect of 2 other main components of our services. One we call consulting, and this is where we analyze problems for our clients, identify solutions for them. So the typical services there would be lab testing, treatability studies, pilot demonstrations, engineering, different phases, pre-feasibility, feasibility, all the way through to construction of plants and commissioning of these plants. And then the blue is operations. At the end, when water treatment plants start to operate, our business strategy is to operate these plants on long-term contracts for our clients to minimize risks and costs to them, and in that process generate recurring revenue. So the green piece, the consulting piece, is generating projects one time of revenue, and the blue operations are the recurring revenue piece. Now, they both feed technological innovation. By operating plants, we actually learn firsthand what works, what doesn't, and how to improve our own products, how to improve our own technologies and stay ahead of the competition. So that's constant source. These operations are constant source of sustaining innovation. Likewise, the consulting part is really a source of potential disruptive innovation, because the consulting piece allows us to identify gaps in the market that are there today or they're probably going to be there in the future, and start addressing them with completely new systems that are not yet in existence, but will be needed in the future. And a good example of this is our selenium technology that I'll be mentioning later on. So we talked about intellectual property in the sector. Our existing intellectual property centers around 4 key areas in the mining market. It's around metals, and it covers both removal of metals to ultra-low discharge limits, the most stringent regulations, but also recovery, selective recovery of metals of value from waste. Then sulfate regulations and sulfate removal technologies. Cyanide, in terms of both cyanide recovery and cyanide destruction. Cyanide is used for precious metals extraction. So the gold sector is very much in need of cyanide recovery or destruction technologies. And finally, selenium, and that's our latest and greatest. And selenium is an environmental issue and one of our flagship technologies in that sector. But we're also looking forward and constantly developing. As I mentioned, the technical development piece is very important. And it's not that we develop that, we spend money on developing our own technologies. Yes, we allocate certain portion of our budget to development, but most of the budget really comes for development comes from our clients. So it's actually industry funded development. And currently in development, we have technologies for the nitrogen species control and for arsenic stabilization. So we continue to innovate. Now, how do we monetize the value of our intellectual property? The key component of that monetization is really the operating piece, the operating services piece, where we operate plants on long-term contracts, generate recurring revenue, and we basically charge tolling fees per unit volume of clean water that we produce to basically create our recurring revenue. Now, these tolling fees are not set based on how many operators we have at the plant or man-hour basis or charge-out rates per hour. They're really based on the volume of water, clean water that meets discharge requirements and thereby captures part of value that we bring to our clients. And the value generally comes in three different forms. We protect our clients by reducing risks and their costs, and it's because it is precisely the experts and specialists in treatment that are best suited to take on the long-term operations of these water treatment plants. Water is not the core of the mining business. Obviously, the mining companies need to be focused on metallurgy, mining, mine development, geology, and water treatment is not a core business. So outsourcing that service as a service to us is a huge value to them. We also allow them to capture more value from their projects by shortening permitting. So that saves a lot of money. Permitting costs a lot of money and takes a lot of time. And quite often we allow that process to proceed very quickly and reduce capital and operating costs associated with treatment as well. And then finally, we help also generate new value streams even for our clients. Some come in the form of the byproducts that we generate that are sometimes recovered metals. So we recover metals from waste, and those metals can be sold, generate new income stream for our clients. Our technologies sometimes allow our clients to extend their project lives, which again is a huge value to them, and also reduce bonding requirements and liability. So at the start of every project, there has to be financial security posted with the regulators. If our technologies allow the mining companies to reduce the bonding requirement, they free up cash right at the start of the project to be deployed on other aspects of the projects usefully. Now, what's important for anyone investing in BQE to understand is that our market is truly, addressable market is truly growing. And it's growing for two reasons. One is that the market is regulatory driven, and historically, the regulations in mining have been getting tougher and tougher. And we don't see that trend to suddenly stop. In fact, we see it accelerating. And that creates new business opportunities. Great example of that for us were selenium regulations, where For example, 10 years ago, that market did not exist. Today, it's a big, important component of the market for us. But the second component is the fact that, despite the fact that people think of mining as a cyclical business, over the long term, the demand for metals is increasing, and especially today, when we're talking about decarbonization of the world, the demand for metals is expected to increase and continue to grow. And crucially, on the BQE Water side, we are shielded from the cyclicality of the mining business in a sense that, the mines need to produce clean water regardless of, the copper price being $2 a pound or $5 a pound. They still need to comply. And so that shields us from the cyclicality while participating in the long-term growth of the market, where as the global GDP increases, the growth for metal, demand for metals is increasing as well. Now, this slide shows a typical revenue from a typical project for us. So this is really based on actual projects that we've worked on. And it basically shows that we extract some value from the early stages of the project, the development permitting already, about $1.5 million over 5 years. Typically, those would be the consulting fees, the non-recurring fees. Then about $22, $23 million over the course of 15 years operations of these water treatment plants. So that would be the recurring revenue. And then the tail end on the closure and post-closure, another $2 million over 10 years. So total per project, we're looking at on average about $26 million. Now, currently, we're actually executing 2 projects that go from development, permitting to operations, 2 projects per year. So if we continue on that trajectory for 20 years, we're looking at the revenue generating potential of $1 billion over 20 years. And importantly, when you look at those 40 projects, they represent a tiny little fraction of the global market, which is really important, again, for our investors to understand, is that we are not here with our technologies to compete on every single project. We really address the niche part of the market where we know that through our unique intellectual property, we can generate value propositions for our clients they can't get anywhere else. So we really don't have competition. And just a snapshot of the last year or so of projects. So what we announced recently was a multi-site pilot demonstration project with Codelco, being the largest copper producer in the world, a Chilean company, demonstrating sulfate removal and metal recovery. We acquired new intellectual property through a partner in cyanide destruction. So that's on top of our cyanide recovery IP that we already have through the SART process. We have 2 new selenium removal plants under construction in the U.S. So they will be going into production and operation in the next 12 months or so. We've been awarded environmental awards, Clean Project Award for our first selenium removal plant here in Canada, and secured operating contracts for our selenium and sulfate removal plants. We've also commissioned and put into production 2 new cyanide recover and recycle plants in China. So that's all that happened in the last year. In numbers, again, we're an established business here, so we've designed and built 24 plants already using our technologies. Introduced 4 of those core areas, technologies in those core areas that I mentioned since 2003. We are treating and discharging water into the environment globally. That's over 20 million cubic meters every year. And in the process of doing so, we're recovering value in the form of 1,800 tons of metals, copper, zinc, nickel primarily. We're also recovering about 1,000 tons of sodium cyanide that does not have to be destroyed anymore, and we give it back to the precious metals producers. And in every single project that we've delivered, there is a component of minimizing waste or completely eliminating it, which is really, really important for our investors to understand. So we're not just treating water to, actually increase carbon footprint or anything like that. We actually, in every single one of these projects, we are reducing waste or completely eliminating waste. We have a global footprint, and it's really important that we have our offices in 3 key jurisdictions that are very important to the mining and metal smelting refining market. Obviously, North and South America are very important jurisdictions for mining globally. And then in China, China is really where most of the metal refining and smelting is taking place these days. And we have offices in all of these jurisdictions, and there's a list of our clients that, as I mentioned, includes some of the top metal producers in the world. Now, the company has been in existence since the year 2000. But really, this business strategy and the commercial business model has been in place, that I described in this presentation, has been in place only since 2015. And our financial performance that's shown in this slide really speaks volumes. And the exciting part of this is that we're really at the beginning. At the beginning beginning of this growth, because when I go back to our services, our consulting services, as I mentioned, are non-recurring. And it's the operating piece, the tail end, that's providing most of our revenues from projects, as I also showed on one of the slides. Most of our revenue from projects comes from the operations. And what's important to realize here is that, between 2016 and 2020, that turnaround and that improvement in financial performance has not been through recurring revenue yet. We haven't grown that piece yet. That's the piece that's going to grow from now on. So the past is really a reflection of our consulting services. And as we move forward, you should see more and more of our recurring revenue coming to our top line and improving our bottom line. We have a experienced management team, and before I get to that, a little bit about our project pipeline. This is also important for our investors to understand, is that in our overall project pipeline, the number one driver for projects is environmental compliance. In fact, close to 2/3 of our projects are environmentally driven. So that's the regulatory side of things. There are some components related to metal recovery and some to cyanide recovery, but by and large, it's environmental regulations driven. It's really well diversified by the technology. So I mentioned all those pieces, those 4 core areas. So we're well diversified. We don't have concentration on one technology only. And in terms of competition, again, most of our projects, in fact, again, close to 2/3 of our projects are sole sourced, where we're not competing against anybody. It's precisely because we are identifying early on in our sales process the opportunities where our technologies are generating value for our clients that no one else can offer. So interestingly, if we're not competing against anybody, the next one that we're competing against would be the mining company itself, thinking that they perhaps can do it themselves. Very rarely would we be bidding on projects where we have 2 or more competitors. So I mentioned we have an experienced leadership team. We've a pretty young team overall still, but we've all been with the company for over 8 years. Some of us for a lot longer than that, but the core team's been in the company for over 8 years. And that's really important for creating and maintaining the culture in the company that really drives us moving forward. Looking at our outstanding shares, it's about 1.2 million outstanding, and our market cap currently about $35 million. And we're growing our treasury, so our cash reserves are increasing over time. And that concludes my presentation. I see that I do have questions here, so I'll click on the Q&A, and unless instructed otherwise, start answering those. Okay. I think I was not the only one experiencing technical difficulties, so there were several that experienced the same problems joining in. One of the questions here is, where do you see the company 2 to 3 years from now? So, it's actually, we're in a very, very fortunate position today that we have extremely good visibility for the next couple of years moving forward. It's because of that strong project pipeline that we've developed, and that continuity in services through these projects. So we follow these projects, like I said, from the early stages in permitting through the implementation and operations. And we have several projects that will be moving into operations, as I mentioned, next year and the next 18 months. So we already, in terms of these 2 projects per year, have a pretty good visibility. On top of that, as I said, the market is growing, and so we see an increase in business activity. So overall, what I would expect is that in 2 to 3 years, we would significantly increase our recurring revenue from operations, and by that I mean at least 50% increase in our recurring revenue. And we will see a modest, but only modest increase in our consulting non-recurring portion of the revenue as well. So again, pretty positive about the outlook. Another question is about our China business and how do you keep the Chinese from stealing your technology? A very good question. So, one of our key tenets of doing business in China is being very selective with whom we do business. And as a general proposition, we look for the large state-owned companies or companies where state owns the majority of the company. What we found with these large state-owned entities are under strict mandates in terms of their environmental cleanup. So Beijing is really trying to impose compliance and improvement in environmental performance top down, starting with the largest players in the industry. But also on the environmental side, we've come across basically the situation where Western technologies actually looked upon as very positive, as we want to use the state-of-the-art technology. So quite often the state-owned companies use us for their own PR and marketing purposes, as we're using the best there is. The selection of our partners is also helping us protect our IP in a sense that, working directly with the mining companies, they don't necessarily have the same drivers as working with engineering companies or equipment vendors who are more inclined to steal technologies. We're really working directly with the end users. So these mining companies are not companies that would just spin out businesses as, New Water Treatment Company, Inc., to compete with us. And really their focus, their core business is winning metals and digging it out of the ground and making it into pure metal. So for all of these reasons, we haven't yet had a situation where we'd be concerned about Chinese partners stealing our IP. Isn't shared liquidity a problem for potential investors? Well, interesting question. In fact, the company has gone. There was a share consolidation that happened several years ago, and it was 100-to-1 consolidation, or more. Maybe 1,000-to-1, and so it was an interesting question because the presumption was that the liquidity would actually get worse by consolidation, and in fact the opposite happened. We see, in fact, our trading activity today being higher than before the consolidation. We're still a relatively thinly traded company, but in terms of if anybody wants to acquire shares in the company, the daily trades are still allowing small investors to come in and buy. For large institutions, obviously, it's about acquiring a larger stake in the company, and that hasn't happened yet. We don't really have an institutional following yet. So if that happens, we would certainly, as a senior management and board of the company, try to address that. Will the company actively build up staffing to improve the number of potential projects beyond two projects per year? Again, a very good question. Certainly, we are in the process of staffing up, and that process has started already a couple of years ago, and we will continue. And so we are building the internal systems, improving our internal systems, both in terms of quality control, documentation, and overall sort of robustness in our workflow internally. And I think that it's realistic for us to think of growing to a point of doing 3 or 4 projects per year within the next 2 years. But it is all related to people at this stage, and moving from 2 projects a year to 4 projects a year just means more people. But it is doable. It's in our goals, and that's something we definitely have in our strategic plan for next year and the year after, is to continue on that trajectory and to be able to get to a position where we can execute 4 projects a year within the next 2 years. I think that answered all the questions that there are. Try to refresh. Okay, another question. As recurring revenue increase and BQE builds up cash on its balance sheet, would BQE consider paying a dividend to shareholders? Yes, definitely. I think that's the intent here. As I mentioned in the presentation, we really don't have a large need for reinvestment in our business, in a sense that most of the technological innovation is funded by the industry, and we no longer deploy our cash in sort of projects, in sort of the build, own, operate type projects. That was part of the previous strategy that wasn't particularly successful, and we learned hard lessons from that, and we're not going to deploy cash into financing projects for our clients. So as our treasury continues to grow, at some point when we are comfortable with our cash reserves, we will start paying dividends. Absolutely. That's the intent. I don't see any new questions coming in. Well, great. Thank you, everybody, for attending our presentations, and thank you for your questions.
Thank you, ladies and gentlemen. That concludes today's presentation. Thank you for tuning in.